2023, the theme of the conference is Winning in Uncertain Times. After our inaugural session, we now move to our first session of the day, CEO's panel discussion on the topic Winning in Uncertain Time. For this session, I welcome the most eminent panel of speakers and request them to please come to the dais. Shri A.K. Goyal, Chairman IBA and MD CEO Punjab National Bank. Shri Dinesh Kumar Khara, Chairman State Bank of India. Shri Hitendra Dave, CEO HSBC Bank. Shri V. Vedyanathan, MD and CEO IDFC First Bank. And our moderator for the session, Shri Ruchin Goyal, Managing Director and Senior Partner BCG. Dear participants, may I request you to please take your seats. I request Shri Ruchin Goyal, Managing Director and Senior Partner BCG, to initiate the panel discussion. Over to you, sir.
Thank you. Respected dignitaries on the stage, ladies and gentlemen, good morning, everyone. It's my privilege and honor to be the moderator for the first session of FIBAC 2023. The theme, as you all know, is winning in uncertain times. And, we have a very eminent panel of speakers here. Just to set the tone of the discussion, I'll take maybe about 10 minutes just to put some food for thought, and then, we'll proceed with our discussion. We all live in a world that is becoming increasingly complex and uncertain. And, we heard in the plenary session a lot of examples of all the different uncertainties. Just to quote a few examples, the geopolitical risk in the last couple of years has almost gone up 90% from the past. The level of inflation that the Western world is seeing today, they have never seen this in the last 40 years. The world is expected to consume more data in the next 2 years than it has over the last 20 years. And climate risk is here and now. We are seeing more frequency and increasing intensity of events linked to climate risk. And, all of us have to act on it today. In this backdrop, the banks around the world have seen a very structural change in their profitability. What this chart shows you at the bottom is if you take profitability and valuations of global banks around the world from a period before the global financial crisis in 2008, they have lost over 60% of valuation. In that context, the Indian banking industry has truly been a North Star. It has been resilient, The profitability levels have been quite robust, and so have the valuation levels been. And this is quite important for economy to grow. So the banking industry has done quite well. However, the Indian banks cannot take the performance for granted. As they navigate through these turbulent times, there are five key imperatives that I would like to touch upon. Number one, the future of distribution. Number two, the digital public infrastructure. Number three, new disruptive technologies like AI, GenAI. Number four, climate strategy. And finally, risk maturity framework. And I'll delve on each of these themes briefly in my presentation. Our research globally has shown the primacy of human touch is critical when it comes to banking. What you see on this page is some well-known digital-only banks, and the data shows that they've not been able to really garner deposits of any scale and size. The average size of deposit that they garner is a very small fraction of what a full-fledged commercial bank is able to garner. And that is because banking is not just about distribution of financial products, it's also about trust, it's about engagement, it's about advice. And a physical presence magnifies and solidifies all of these elements along with digital. In India, banks have been able to establish a large number of channels, both the traditional channels like the bank branch, ATM. You see, even these channels are growing in India, albeit at a slower pace, but there's an explosion of other kind of channels: internet banking, mobile banking, business correspondence, and increasingly going forward, what we call as embedded finance, which basically means that banking services can be distributed through banks' own channels, but also through partners like big techs, Fintechs, and other large ecosystem players. Now, the question that banks have to deal with, that this is a complex architecture. Not only have they to deliver their products and services in a secure, seamless manner across all channels, they have to also think about investments on all these channels and about cost income ratio, because every channel requires investments. Now, India has had one of the very unique advantages of having a digital public infrastructure at scale, and we've seen the benefits of that playing out in various forms like UPI. Now, one of the newest elements of our digital public infrastructure, OpenStack, was the account aggregator framework. It went live 2 years back in September 21. And in the first, I would say 1.5 years, the offtake was quite limited, like any new framework. But in the last couple of months, as you'll see in this page, we are seeing the start of an hockey stick framework. Today, more than 40 banks, more than 100 banks, more than 40 AMCs, insurers are already part of the account aggregator framework. And what this means is a lender, with just a simple click of a consent by the borrower, can get access to very rich data, not only the entire transaction data of banks, but also investments in mutual funds, stocks, insurance, and very soon, even the utility bills like electricity, telecom can all be accessed through account aggregator. Now, this can actually create a kind of revolution we saw when we first had our bureau set up in India, right? And then we saw the entire retail credit, SME credit take off. Can this be the next set of evolution? But for doing that, banks will have to reimagine all their functions. Now, let me take an example. You take a small cloth merchant somewhere in a small town in India. Historically, most of these merchants would not get access to formal credits. And even if banks tried, they did not do it in a manner that was economically viable for banks. And the large part of the reason was that there was very little data that a small merchant could generate. But that is changing quite rapidly. Today, this small merchant has an Aadhaar card. He has a QR code in his shop, and he accepts digital payments. He has a bank account where all the digital transactions flow in. Very recently, he also has taken a life insurance policy, and he's paying his premiums on time, and also started investing a little bit in stocks. Now, all of this data today can be accessed digitally by banks or by NBFCs to give loans. And they can design products that are cash flow based and that can tailor the needs of this particular small merchant. But that will require banks to think about data governance, right? If they get this data through the consent, how are they storing the data? in what shape and form, and for what purpose. They have to also think about end-to-end digital journeys and a complete reimagination of their underwriting process. Coupled with the digital public infrastructure, banks also have the power now of new technologies like AI and GenAI. Quite often it's been discussed, what can AI and GenAI do? And a simple way to understand the power of AI, GenAI is to imagine a human brain. The traditional AI is like the left part of a brain, more analytical, more predictive, and GenAI is like the right side of a brain, which is more creative. It can generate content. But if you bring both of these together, then magic can happen. For example, if banks were to do personalization, it can use traditional AI to build models using all the data that we just saw to create the next best offer, but then use GenAI on top of it to create very vivid content in text, in multimedia, and then it can be used to communicate with the end customer. The question is, how do banks really reimagine a lot of their functions using these disruptive technologies? Moving on to climate, I think I talked about climate risk is here and now. We've studied the entire portfolio of Indian banks' exposure in terms of loans, and we feel about 50% of loans are to sectors that are vulnerable to climate change, right? And the amount of financing that's required just in the next 7 years for green transition is immense. It's more than $2 trillion. But climate change and climate transition is a very complex topic. If I take just one example, this is an example of oil and gas industry. There are large number of technologies that can be used to reduce carbon footprint. Some of them are already viable, like for example, biogas, renewable energy. It's viable today, but it has not been used at scale. Now banks have to think about how to underwrite if they have to give a loan to this particular sector, but also how to educate both their own workforce, but also the companies that they go and serve. But then there are many, many new technologies that are still not viable, but they could hold immense potential in the future. For example, green hydrogen, right? Carbon capture. Now, what can banks do? It's difficult to go and lend if a technology is not yet viable today, but maybe they can think about alternate mechanisms. Think about a venture capital funding. Think about some kind of a green bank carving out of financing for the future if we were to achieve as a country our net transition targets. But then it's not just about large corporates. A lot of money, in fact, we envisage about 60% of green financing will be actually required by MSMEs. Here's an example. Imagine a small merchant who's supplying linen to a large hotel chain, and that hotel chain has made a commitment globally that they want to move to green, and that will also percolate down to their suppliers. And this small merchant now has to both get educated first. What does green mean? What does sustainable technology mean? And then have the wherewithal to be able to invest to create linen in a green manner. And that's where I think banks can play a very, very vital role, not just in terms of designing innovative products, but also actually doing the education for these MSMEs to be able to transition to green. And finally, all of these changes that we're talking about, geopolitical risks, climate changes, and digital all pose newer kinds of challenges and risks to banks, and banks have to continuously evolve their overall risk maturity framework. When we did a study this year's FIBAC, we tried to assess how ready are Indian banks, and we found most of them are somewhere in the middle, and there's a journey for them to travel on this risk maturity framework. So I'll conclude my presentation, and I'll start the panel discussion on some of these topics.
So Mr. Khara, let me start, my first question to you. Sir, as you look at all the challenges, headwinds, that you see around the world and also in India, what advice would you have to banks to think about the future risks and challenges, and how should they, prepare for it?
I think we all live in an uncertain world. That's a reality. And when we live in an uncertain world, and while we are having the responsibility of managing the money in a fiduciary capacity, we have to evolve the structures and system which gives us enough insight into the kind of risk which are on the horizon. So when I talk about the risk which are on the horizon, perhaps there are risks which are in the near term, there are risks which are in the medium term, there are risks which are in the long term. Well, in the near term, the risk could be ensuring that the quality of the loan book should stay healthy and the bank should be in a position to navigate the interest rate risk well. Again, this is a function of the ecosystem. Do we have structures and tools available for hedging the interest rate risk? It differs from economies to economy. And at the same time, when it comes to the kind of competition which is also emerging, what is the kind of resilience of the banking system vis-a-vis those players who are emerging on the competitive landscape? But very important is for any bank, and more so I think it holds good for a country like India, which is predominantly banking-led economy. The quality of assets is very important, which means that the underwriting principles and ability to ensure that there should be effective control and oversight on ground. This is very, very critical. And in this context, perhaps if at all we can take example of India, the ecosystem has certainly evolved and that has helped in terms of profiling the customers better or at least validating the balance sheets even better. So I think this is something which is very positive and that is one of the reasons why perhaps we get to see much better balance sheets in the Indian banking system. But when it comes to the medium-term risk, to my mind, the risk which is looming large today, I would say the medium-term, the other very important risk is all of us, all banks are dependent upon various vendors in terms of providing various services, including IT. The strength of any bank is the strength of each of these vendors, which very clearly means that, of course, banking system is subject to a very strong regulatory oversight. But all the players in the ecosystem are perhaps not subject to that kind of a oversight, regulatory oversight. So it becomes very essential for the banks who are consuming these services to have some kind of an assurance function in terms of their resilience, their integrity. If at all there is any challenge on these two counts among the ecosystem players, the banking system becomes vulnerable. So this is the other near-term risk which I feel that we as lenders we have to keep in mind. And when it comes to the medium-term risk, to my mind, that is the transitioning risk. We all talk about the climate risk. You have also talked about it in an abundant measure. But I think to my mind, where we stand today, we'll have to start thinking in terms of transitioning from the fossil fuel to alternate fuels. And in that process, one example I would give is that FGD, which we are insisting for various thermal power units, how to finance it, how to make it a acceptable proposition in the mind of the group of borrowers. Because unless and until they get finance which is reasonably cheap, the adoption will be delayed, which will lead to the delay in transition. And I think that we have got a challenge in terms of the time for transitioning. That is something which you have to keep in mind. And how do we ensure that we continue to have one, buy-in from the industry for transitioning, and secondly, we should have the sources of finance, sources of funding which are cheap, which could be with the help of various multilateral bodies. But we all know that climate finance and the transitioning finance, there was a huge commitment made by the developed world But unfortunately, they are unable to honor their commitment because of the situations obtaining in those countries in the current scenario. So I think to that extent, we'll have to probably dish out ways and means through which there could be some kind of a cheap source of funds available. To that extent, we also look at the regulators, if at all they can give some relief when it comes to maintaining CRR, etc., so that we can cut the cost of funds which we have. Or alternatively, for such kind of financing, can there be a lower RWAs? This is the other thought which I have in mind. And the last, of course, which is the most important, which would be not in the near term, but yes, in the medium term, is the climate risk. We have to deal with that because climate risk we have already started. See, we have been seeing climate risk in agriculture, but now it is getting much more pronounced. And I think increasingly, as we move forward, the climate risk is going to be very, very significant in the days to come. And for that climate risk also, then of course we have seen that the newer avenues which have emerged in terms of the renewable energy financing. So these are the kind of avenues which have emerged. But yes, to ensure that there should be a greater adoption of these newer resources like the renewable energy, EVs, batteries, battery storage. So I think it's a highly complex, because considering the fact that we'll have to scale it up in no time, and we have to have the base power also in the country. Any power plant, thermal power takes at least 5 years. We have not invested. If at all industry starts growing at the kind of rate which you are expecting at about 8%, I'm sure we will need solution ASAP in this particular context. And that is perhaps one of the reasons why when it comes to the IBC, we have seen much better value coming for those stressed thermal power plants. That very clearly is a reflection of how the industry is perceiving the growth and the consumption of the fossil or this power, which would be the base power. Though we are seeing rapid increase in the renewable power in the country and also adoption of EV in a very big way, but I think we probably need to step up on the pedal and go for much faster adoption of renewable energy. And also, while we are doing that, we have to keep in mind the transitioning processes also, so that FGDs kind of things should be adopted in a very big way, so that emissions should be reduced. Unless and until emissions are reduced, we have a challenge. So these are some of my thoughts, initial thoughts.
Thank you, Mr. Khara. I think
a bit longish question, answer to your small question.
I think you've touched upon a large number of points, both short term, medium term, and I'll pick on some of these points. But I just want to move on. The topic is winning in uncertain terms. So we've talked about uncertainty. I want to focus also on winning. Let me come to you, Mr. Vaidyanathan, on the winning theme. As you look at all the changes that are happening in the landscape, are there newer segments that are emerging, for banks that become, viable business models for banks?
See, all of us know that whether in the lower income segment, middle, upper income, everywhere in India there's opportunity, and everybody's building business around these. But one segment I'm beginning to see off late in the country for the last maybe 4 or 5 years is this, this economy or number of jobs coming up in the platform economy, the gig economy. People who are, in every sector, whether it's logistics or, healthcare or delivery or e-commerce, everywhere there is one large category of people getting created there. I was reading a Niti Aayog report which said that there will be 32 million such people in the next 4 or 5 years. Now, for this profile, 32 million is a large base. People have not actually yet discovered who they are. If somebody is lower income profile, it's lower income. If somebody is upper income, you know. But this profile is a new emerging profile. They are neither well paid, nor they are terribly underpaid. Neither are they highly skilled, nor are they exactly underskilled like a laborer or a mason. Neither are they highly educated, MBS, etc., nor are they really undereducated. So there is one middle that is getting created in India at this point of time, which can be a large middle. It is coming because of either migration or, but that is a large middle coming up in India. I think people have not yet figured out how to deal with them because there's some in the center. If you bank with them, you don't know if they'll get large deposits or not. If you lend to them, you're going to lend them unsecured credit, which will have its own complications, and unless it's really cash flow backed. So that is, their investment ticket size are really very small. Their insurance tickets are small. So that is one segment coming in, and that's really an important segment in my opinion. The second emerging thing I see is that with the new, prosperous, economy getting prosperous and people going up the pyramid, I find many new jobs coming up in the country, which are new jobs, which you cannot categorize them as a Cat A, Cat B, Cat C company. That's how all banks do. Okay, Cat A company, I give you 10% interest rate, Cat B, I give 11%. That's how they talk, right? But they are not belonging to any other category, like dog groomers. People are having pets because they can afford it. There's somebody who comes and, carries a pet around. There are, somebody comes, what do you call the people who cut, who trim your nails and all that? Manicures, right? All the people. So they are the new generation people, beauticians. There are really somebody once told me that they organize dog parties. Dog ka birthday party bhi hota hai, but hota hai. Some people are doing it. So the new set of jobs getting created in this country, which are exactly in that category, that also is really, but by the way, they're earning reasonably 40, 50, 80,000 a month. So these are new categories coming up, and I think our models have to evolve. If you have time permits, we'll talk about that, about how they can be quasi-physical, how they can be quasi-digital, how they marry the two to actually bring them into the banking circle. That's my quick thought.
Yeah, I think a large number of new segments coming up and different ways of serving them. Moving on, Mr. Goel, PSU banks still kind of account for bulk of our banking industry, and it's quite heartening to see the PSU banks have done so well over the last couple of years. But that was always not the case. The PSU banks went through a very difficult cycle. How do you see the prospects, going forward, and what has been the learning, and how do you ensure that these banks can continue to participate, in the growth of the Indian economy?
Ruchin is a very good question also, and Kharaji has already told we are already living in the uncertain world also. So as you have told, key profitability definitely everybody knows. Even in the inauguration address, key profitability of the bank is increased manifold, more than 1 trillion in the last financial year of the public sector bank. Then first we have to see what is the parameter of the profitability. There is a lot of parameter, but I will touch only one point because interest rate has been also been addressed by the Kharaji as well as the governor also in his speech. Ki last 1 year, more than 1 year, 250 basis point was the increase in the repo rate. So we are having liability side product, asset side product. What is my belief? Ki if there is a increase in the interest rate, the transmission of the interest rate in the asset side is more quickly as compared to the liability, because all the loan which is linked with the external benchmark, they have been repriced immediately. Even the loan linked with the MCLR will be repriced maybe in 1 year itself normally. So, but only the liability side, if you see, that is not repriced immediately. So that is a one risk which I am perceiving. So we have to see how the impact will be on the NII. Even in the last quarterly result, we have seen some of the bank, the growth in business is there, but NII there is an impact. So first we have to there. So there should immediately we should thought ki if there is a pressure on the NII, then we have to see the other avenues also to remain the same profitability. So other income will come in the place also. So I am not going detail because it will take too much of time. Everybody knows ki what is the other avenues, ki then non-funded, non-interest, TP, a lot of things is there. But I will tell some of the point which I think apart from the NII also, how we can be agile in the, even it can increase further also. Because scenario is very good. If you see the growth angle, etc. also. So first, I think organize the structure. Then organization structure mein, then I will divide in 2-3 part also, ki digital transformation as on it, which is very much needed. Then we have to make the investment in the digital to make the product in such a way which is convenient to the customer, point number one, and the right price also. And second, maybe when we are talking about the digital, there's some process we can do the automatic process, like opening of the account by biometric, whatever it is. And third, very important is the data analytics also. By making the use of the data, we can increase our business also. Because why I'm telling, because even in the, as Kharaji has told, market is very competitive. If there is no much demand of the credit, so all the very good customer, maybe AAA customer, they are asking for the reduction in the interest rate. So definitely every bank has to take the call, whatever the interest rate. So data analytics, definitely we can create the use of the data, and we can create the lead etc. Also. So second point is the HR transformation also. HR transformation, my view is the role-based recruitment is necessary, because we are talking about the cyber security, we are talking about the risk management, so that should be. Then second, the innovative pay structure also is in need of the hour. And third, internal training also, whatever the human we have taken, the internal training is also much needed. And another point is we have to move from the transaction banking to different banking, because transaction banking we are debit credit. So we should try to market the product by using the transaction to cross-selling, etc. also. The another, definitely for the customer service, we can talk the relationship management, then we can add the CRM solution also, because now customer do not want, and the customer want 24/7 working as on that, NFT, RTS, that is available also. And we can think other product when we are talking about to increase the profitability. Wealth management, we can think whether we are not providing wealth management to the NRI, even for the operational part, where cash management is also one of the area. The another important thing in the banking basically is how to mitigate the credit risk. So how we can improve the lending by taking the, because fintech companies available, lot of information is available now. Balance sheet we can verify from the MCA, GST what is the turnover. So there is a lot of opportunity available to manage the credit risk also. Then another is the EWS also, because the Anni Valni Singla, they will give the idea also. And one important more thing also, apart from this, collection efficiency. Because ultimately, if you see the more than 60%, 70% on the asset side is the credit. So we have to concentrate on the credit. How can we improve the quality of the credit? How we can monitor by using the platform available? And third, very important is the collection efficiency. Collection efficiency, if you see in the NBFC as compared to the banking sector, everybody is aware. I'm not telling you, even the IDFC mein inka better hai, public sector banks. I used to talk with Nathan, how you advise, what is your collection mechanism? So because they are also doing the personal loan, etc., that only the model can work. So this is my initial thought, because profitability mein, if I will chalk out 1, 2, 3 points, it will take 2 to 3 hours. So I have tried to sum up this is the main point which definitely we should consider to remain the agile in the market. But profitability will definitely increase. Banking sector is performing very well. This is my concluding remark.
Thank you, Mr. Goel. Just moving on, Mr. Dave, we talk about the Indian economy moving from 2.5 trillion to 4, 5, and then beyond. What kind of role do you see foreign banks can play in this evolution of the Indian economy?
Sure, but if it's okay, can I just talk about some of the risks? I also think, maybe.
Please.
I think while digitization is obviously great from a consumer experience, the ability of banks to handle volumes, but I think just the governor encouraged all of us to do more stress tests. It is today the slightest of rumor about you, okay, could be true or could be completely false, and we saw that in the case of the US situation just 6 months back, right? Money moves out overnight. 100% of our deposits can move out overnight, right? So that's, or it could move out on a Sunday where you don't have access to any funding except central bank funding. So I think risks of this nature didn't exist as recent as, 3 years back or 4 years back or so, right? So, and the other thing is social media. I don't think, frankly, financial organizations will ever work at the same speed as the social media does in terms of spreading the adverse news. You cannot get the count. So I think that's one. I think we saw very recently, I know the cyber risk got mentioned, but we had a real incident, right, where one of the largest banks in the world was not able to do basic activities like buying and selling of securities in the US market. They had to go back to Excel, all the way back to Excel with dongles and things like that. So, or a very large port in Australia, again, a cyber attack, they just could not move containers. I mean, I highlight this to say a lot of work, even in banks now, doesn't actually get physically signed off by a manager or an officer or a general manager. It's just, we've embedded lots of algos, lots of rules, lots of pre-approved things. If A, B, C, D is in place, the money leaves. If somebody changes that A, B, C into A, B minus C, the money will go to somebody different, and you are on the hook. So I think technology is a great enabler. We must support it, but I think as financial institutions, we'll need to be, we are naturally trained to be credit risk managers, but perhaps technology and digital and all those risks. I think I just thought, and same thing even on the geopolitical side. I think you mentioned it, number one. We normally, when we lend, we don't really go through the supply chain of the customer or the end buyer chain. We wouldn't have seen how many of our customers have buyers in Ukraine or Israel right now, or a country with where the default. So I think that's the other thing, that your customer is in good shape, but if the nut which goes into the car comes from a particular country which has got shut off, the car is not produced. And if the car is not produced, your money is at risk. So I think we will also have to learn as an industry. I just thought these three things. But coming to your question on international banks, see, I think if India is going to achieve, and I'm sure it's not a question of if, it's when we will achieve the 4, 5, 10 trillion dollars. Let's face it, it is not going to happen by Indians selling to Indians. Okay, we just don't have the per capita income in the foreseeable future. We will have to make goods and services that are consumed by the rest of the world. Okay, that's part one. If that is required, then you require international banks to support through, for example, if an Indian, let's stick to bolts or nuts only, is selling something to somebody in Mexico, what is the credit risk of that Mexican buyer? What is the credit history of that Mexican buyer in dealings with other exporters? Who are the other buyers of that nut in Mexico? Which are the other sellers? See, these services are difficult for a domestic bank to provide because it's domestic data they have, international data. So one is that if India is going to achieve its ambition, it will happen, I am convinced, through selling more to the rest of the world, goods or services. Clearly, international banks will have a reasonable market share in that, right? That's one. Second, the economy also depends a lot on just simple things like education, right? We now know that there are more Indians who go to study in US than any other nationality. Somebody has to enable banking services. It sounds like a small thing, but the maximum number of calls I get is actually from worried parents that my child is going to UK, Indian parents being Indian parents. He only has $5,000, they tell me. I tell them $5,000 is a lot of money, you can survive, but they all want a credit card on arrival. They want banking. And without banking services and credit card, it's difficult to imagine how you could settle down. So through the softer route of this nature, but equally importantly, I think you look at any large Indian company that's got significant expansion plans, it will require significant either export markets or capex, or for example, let's, Air India, right? When it buys the first 2 new planes, somebody has to finance it, right? I mean, in this instance, it happened to be HSBC. That's why I'm taking that example, of course. But the role is very similar to what domestic banks will play, but the parts will be depending on where we can add more value than domestic banks.
Thank you, Shitabe. I think some of the points you touched about in the risks, you talked about digital cybersecurity risks. Mr. Khara, you also spoke about all the banks depend on vendor ecosystem, right? And what happens if one of those systems has a risk? I think the question, and I'll maybe Mr. Khara first is, as we become more digital, the reliance on some of these companies will continue to go up, right? What can be done as a system, as an economy, to ensure that we have players that are more credible? There was some discussion on should we create a shared utility, or should there be accreditations, or should there be more regulations, so that we can have players who can serve banks, but they are also robust and resilient the way banks are subject to regulations, these players also can be. So any thoughts, sir? What?
Yeah, particularly when we have got a responsibility of ensuring that the channels are up and running 24/7 by 365. So naturally, when it comes to, one is, of course, conditionalities which are prescribed in SLA, but unless and until those SLAs are subject to the ground level testing, and also enforcement and management of those SLAs becomes absolutely essential. So that is, I think, that is something which has been done. But yes, of course, I think these kind of risks are emerging almost on a go, because it is not merely the SLA, it is also a fair assessment in terms of the capability of those service providers and also their governance mechanism which is in place. So actually it is at the time of when we are onboarding our partners, we always look at it, do they have the capability and the resilience which is expected by the bank, which is expected from the bank, and likewise bank also expects similar kind of a resilience and integrity of the processes and systems at their level. So actually that is one of the reasons why what I mentioned, it's a time when perhaps though there may not be a regulator in place for such kind of service providers, but eventually that assurance function has to be done by those who are buying those services. Or alternatively, there could be some certification agencies, third-party certification agencies, which can come up and give an assurance to all those who are consuming such services. To my mind, this is the way we have seen the evolution of the audit function. I think this kind of an assurance function is going to be very, very critical, more so when regulators are expecting financial institutions to ensure that their, they should be, their vendors should be 100% reliable. So that is possible. Initially, it will happen by the larger institution getting into the assurance function, but eventually I believe those independent certification will become the way forward.
Thank you, Mr. Khara. Just conscious of time, maybe a couple of questions more, and if there are any questions in the audience, I'll try and take one or two questions more. Mr. Radhanathan, the way our digital public infrastructure has been set up, and banks have so many different avenues in terms of channels to use to distribute their products and services. Yet we see the physical branches still kind of growing in India. What is the end game here? I mean, as a country, where do you see 5-10 years down the line the distribution of banks look like?
See, 10 years is a very long time, but let me just give a more near-term picture. See, to think that when you go online, whether it's account opening, giving loans, investment advice, everything, oftentimes there is a last element of a physical leg that is often required. And to connect the two seamlessly is where really powerful things happen. For example, I was reading up about the medical industry. So they said that, look, doctors are available on call. Okay, somebody put up that capability and all that. But when doctor is messaging on call, they're also checking your blood pressure. They're also checking your pulse. Now, how you're going to show the pulse to the doctor? Okay. Now, therefore, some fintech has now come up and said, here, listen, or some technology firm or somebody like that is now setting up physical beds where people can come and then they can show the pulse and then doctor can advise. So they're seamlessly merging the two. Now, this is happening in banking also. This is happening elsewhere also. So the very important thing is that how do we put them together is one important thing. We think about it all the time. Second thing is that there are large number of digital public goods. We know that. Okay, we know all the well-known ones, whether it's Aadhaar or and the credit bureaus, and there's so many digital goods, UPI and all that. Now, as a bank, we need to connect with all of them. That's first requirement. Now there are new digital public goods coming up, which are not even those well-known ones. For example, account aggregators coming up. It's a new digital public good capability that's coming up. DigiLocker is a new capability that's coming up, which is not part of the original stack. Now, as an organization, to your question, we need to be in a position to connect into all these ecosystems, all the important ones. Otherwise, all these terms are just general theory for us. अच्छा ये हो गया digital public good. अपने को lecture थोड़ी देना है. The thing is that we have to connect. We have to make them. We have to utilize them. So we have to connect. For that, you need API capabilities. Then, after you connect, then you need to do something with the information. For that, you need a data capability. Because after all, without a high quality data capability, what to use all the goods? Then after using data, then you need to have all this personalization, hyper-personalization, all these technologies have to work. Then after that, you have to present them at presentation layer. So the whole stack of being able to connect, to use the data, the technologies, and the let me say, the presentation layer, they all have to come together to get maximum value. I can tell you at our bank, we're thinking about these things all the time. For us, this is not general GAN models. So this is something to really work with. We believe we can reach large number of segments. Like Goel Saab said, our collection capabilities dramatically goes up if we build this up. Our ability to reach customers goes up dramatically. Our ability to meet customers' requirement goes up dramatically. We have to respect the customer's time. So therefore, to give meaningful tips and recommendations to the customer, not generally spam customers. All these powerful capabilities come up from this whole capability.
Thank you. Just, conscious of time, I just open up, the floor for any questions any member in the audience has for any of the panel members. So if you can just stand up, if you have a mic, just take your name and ask the question.
Yeah, good morning, sir. In the morning, we heard our honorable governor about, the young Arjuna being able to balance both the fish eye looking at the water. So obviously, our central bank has done an outstanding job steering us from 1992 up till today. But worldwide, in the Western hemisphere or even on the eastern side, the central banks have not really been able to do a fantastic job, whether it comes to financial stability or managing inflations or containing crises. So there is a school of thought which is coming, are the central banks really required? Cannot the largest banks in the respective countries play the role of central bankers? And the second thing is that the decentralization of finance is happening, and one of the applications is obviously digital currency. Going forward, how successful the central bankers are going to be able to either stop the creation of a parallel economy or take advantage of the parallel economy which will get created, going back to the days of bartering.
There was a point of time when the largest bank of the country was actually performing the role of the central bank. It was before 1935. It was Imperial Bank of India which was performing the role of Central Bank of India, Central Bank of the country. Now, your question whether central banks are required, I think they are very much required. Particularly when you are dealing with the money of very large population of the country, there has to be an order. And there has to be somebody, because those fiduciary capacity, there has to be a central banker who should be in a position to watch the interest of such large population. That is one. And secondly, of course, in the current situation, it is inflation targeting is something which has been one of the major objective for the central bank when it comes to the monetary policy. And what we have seen in the most turbulent times in this economy, it was perhaps the maturity of the central bank, which could see that the Indian economy sailed through harmlessly. And there are examples across the globe what actions were taken by various central bankers and how it resulted into the damage to the economies. So I think I'm very convinced that the central banks have got a role to play, and it is not merely central bank, there is a need for regulator in all sectors. And that is something, as the economy evolves, as there is more freedom given to the players, there has to be somebody who should act as a referee and umpire. And that is nothing but the central bank who can perform that role. Otherwise, you can very well imagine what will be the situation in the play field also, if at all there is no umpire. So that's one thing. Your second question relating to CBDC, on that I would like to say that if at all there is a currency, somebody should stand by it. And that sovereign guarantee is nothing but this, it is offered through the CBDC. All of us have seen what happened to crypto. So I think, again, if at all there has to be an order in the economy, the CBDC is perhaps, it marries what is there in crypto, but at the same time, it ensures that there is a confidence, if at all something is known as currency. There has to be a confidence, and that is something which is guaranteed by the central bank.
Thank you. So if I can just ask a question briefly.
I am KK Gupta from Research in India. We are talking about uncertainty times. So after coming artificial intelligence, even fintech company, whether it can be threat to the bank.
I think we have to change our mindset also. Earlier we used to say ki if a fintech company is coming, they are the competitor to the banking industry. But now I think in any factor, forget about the AI, the role of the fintech company is the collaboration. We should make the collaboration work. I do not find any threat in any fintech company.
Also, if you notice, AI is everywhere. Now, of course, a new generative form of AI has come, which is also another level of capability, of course. But you should see this as an extraordinary means of making things happen, capabilities. Today, for example, if customer is sending you a mail saying with a particular problem, some human being is picking it up. Some human being with a limited ability of seeing on the screen is giving some response and solving some problems. Tomorrow, if the same thing is plugged into a proper high-quality generative AI, then the same question, it can go into your whole system, prepare a very appropriate response. You can go into your systems, do the calculations, submit, like how you go and get something in ChatGPT today or on Bard. So the quality of conversation to customers and the service you can provide can all dramatically go up in this one small example. And then you take it up from there, from that point of view, and then you give it a face or give it a voice. Then you can even have a human bot speaking to customers effectively, as effectively. So these are real capabilities. We should actually see these as opportunities.
Maybe one last question if somebody has in the audience. All right, I'll bring this discussion to a close. Just to summarize, we spoke about winning in uncertain terms, and there were many risks, both short-term, medium-term, long-term. That of course, the economy and hence the banks face. But also there is a clear appreciation of what India has done and the regulators have done in the past with even more, dramatic events that we've seen in the past. So there is confidence that the banking industry is resilient and there's a lot of opportunities. All the technologies, while they pose a threat, they also present tremendous opportunities for the future. I think on that positive note, I'll bring this panel to a close.
And also the person who asked the question of central banker, don't forget the case of Sam Bankman-Fried, right? Don't forget that case. You should.
Thank you. Thank you so much.
Thank you all dignitaries. This session has enlightened us on how Indian financial industry continues to be the world's envy during uncertain time. Our panelists have left no stone unturned by sharing their deep insight that has added immense value on the topic. Thank you, dignitaries. Dear all, we will take 5 minutes to change the dais. Before we start the next session, may I request everyone to please be seated.